Welcome traders to this educational video of Nifty Analysis, episode number 46. In my previous educational video, I had shared that if Nifty spot is able to close below 14,200 levels at least for a couple of days, then possibly we'll be seeing lower levels in Nifty spot. What we have seen is that Nifty spot did make a low of 14,155, but if I just switch this chart to a line chart which only shows us the closing price, then the lowest closing in last few days was around 14,295, 297 to be precise. So it clearly shows that our levels were highly respected by the market, and there was some sort of support, which I will come to that in the later part of the video, probably in the last part of the video, so stay tuned for that. But we can also see one thing, that we have some sort of positive candle pattern over here, correct? We can see this big red candle, although this is not a very bookish type of example of bearish bell toll, but yes, nevertheless this is a big red candle, and then suddenly we have a very big green candle which is trying to close above its 50% of its real body. These two candles actually were responsible for the entire reversal of the market, and in last few days market has rallied pretty nicely. So now the $1,000,000 question is whether this rally will continue, or is this just another short-term pullback? Because overall, if you see, from February, market has just been range bound. We can see few days down, then few days up, again down, up, down. Only this consolidation sort of things is happening. So let's dig deep into this video, and as always, let's analyze as top-down approach. And currently we are looking at the monthly time frame of Nifty spot. Immediately what we can see is this particular candle is a not very good candle. Correct. This is a hanging man. Generally, hanging man's candlesticks are formed at the end of the trend, but obviously this does not mean that this is the top or something. We'll need many other things to signal it as a top, but yes, this is not a very good sign, especially when we are at a important resistance, which is somewhere around, you can say 15,480 to 15,500 levels. All right. Another sign, we can still see that price is pretty far away from the 50-month simple moving average. It is a clear sign that still market is overstretched even after so many months have passed. RSI remains to be in the overbought position. Yes, the trend is up, but apart from that, not much positivity I can see in the monthly time frame, because even before this candlestick, we can see a doji, and before that we can see a couple of shooting stars, which are even not positive candles. So summing it up all, we can say that from higher levels, somewhere around 15,400 or 15,500, some sort of selling pressure is surely coming up. Now let's move down to the weekly chart. Now if I move down to the weekly chart, again nothing much I can see. What we can see is this is a nice, very good rally, and after this rally we can see price just going up and down. Basically it's just a consolidation. If you can see over here, somewhere over here, price was pretty far away from the moving average. Price is just doing time correction, and the price is trying, moving average is trying to come near to the price. This is basically nothing but a consolidation. Nothing much negative or even positive in RSI. So yes, trend continues to be up, no doubt about that in the weekly chart, but nothing much significant has happened in the weekly chart as well. Let's move on to the lower time frame, which is the daily time frame. Now something has happened in last few days in the daily chart, and before showing that, I would like to share with you a channel which is being formed in the daily chart. All right, here we have. I hope you can see this very, very clearly. You can see this first, second point. You can see first point over here, and couple of times market has tested the lows even over here. So this is a parallel channel. This is a downtrending channel. But since the momentum of market to go down is not very strong, so the slope of the channel is not very steep. Otherwise, market could have come down very, very fast. Now, my friends, what has happened over here is, especially about this couple of candles, which I shared with all of you in the starting part of the video, that this is a very, very powerful candle setup. And just before it, we also have a hammer. So this adds to the overall bullish environment. And after many days, I should say that Nifty spot has been able to close above the 50-day simple moving average. The question is whether this rally will continue or not. Now, if you cross-check on the RSI, we also have a trend line breakout, and generally trend line breakout in RSI always come before the breakout in price. So this is a welcome thing. It adds to the overall short-term bullish setup in the chart. Now, what should I say is that should you accept very big rally in the market currently? The answer is probably no. And the reason for that is when we cross-check the weekly charts, we could clearly see that the market overall is consolidating. You can see very, very clearly that overall market is still choppy. But in this choppiness, we have been able to make some amount of money in last few days on the upside. Now, talking about levels, right? We have these important levels in front of us. Now, what we can see is this Nifty Fibonacci extension, which I've plotted on the screen, and especially this particular level, you can see 15,000 level. This particular level was a very much important short-term resistance, due to which market today did open gap up, but ultimately it did close down in the red, not in the red, but it just closed 30 points up, but it opened a lot higher. It opened somewhere around 14,978, somewhere over there. All right. So basically, now what I'm trying to say is that this is a very important level, 15,230, or maybe even 15,000, to be precise. 15,300 levels is a very important resistance. Even this particular level over here, 15,190, 15,200 level is very important. In case if the market inches up forward and heads towards its 15,200 levels, you need to cross-check your shorter term charts, probably even the hourly charts, and you need to see how the price action is happening over there. Is market trying to top out or it's trying to come down? First thing you need to see that. Second thing is, in case if price is still aggressively going up, and if it is able to close above 15,300 levels, then this will possibly be a very good sign that bulls are in total control, and we could probably hit higher, and we could also see 15,450 to even 15,500 levels. Once this level is tested and we close above that, only then we'll be able to go higher. But as of now, it's not a very good time talking about very big levels, because one thing is for sure, that market is choppy. Yes, we have seen a very good rally, very good short-term rally in the last few days. Especially this particular up move has been very, very smooth in comparison to this sort of move, just couple of days up and then the market starts coming down. In comparison to that, yes, this has been very good. But I would say that traders, short-term traders, need to be very, very cautiously bullish. If you have initiated long somewhere over in this area, and if you're carrying your long still, your thought process should be to trail your stop losses. In fact, even book partial profits in your short-term positions, and then see how price action pans out. In case if market moves forward and hits even 15,200, you might get even higher levels to book your profits. And as I told you that if Nifty is able to close above 15,300 levels for a couple of days, then we would probably see higher levels. So keep these levels in your mind. Have a very strong trading strategy for all of your trades. Stay indoors, stay safe, and take care of your health, my friends.